Hello, Anthony.
Hello, Claudine.
We're here today to talk about TIGTA's report on the Offshore Voluntary Disclosure Program.
TIGTA,
the Treasury Inspector General for Tax Administration.
Yeah, these guys are usually the cool guys. I'm going to be honest. Like, if I was working for the IRS or the Treasury, I'd actually be working for the Treasury Department. I think working for the Treasury Inspector General for Tax Administration, that's a pretty cool job, because I've met a lot of those guys. They've come to our office. They've helped us out with things. And they sort of, they take an approach where they really do seem to be on the side of reality.
Yes.
That whatever the official party line that comes from the IRS and what they're saying, they're like, okay, that's great, but we also have a reality, and maybe the entire world doesn't look at this as the same way as you. So you could see I got excited when I said, my buddies at TIGTA going to have an OVDP report. Oh, it's going to be great.
Some of the hard-hitting questions we thought they were going to answer.
Yes.
Why are people with no actual criminal intent getting threatened with FBAR penalties?
Right, because FBAR penalties were to get the international terrorists in 1970.
Drug dealers.
Drug trafficking, people trafficking.
Oh, man, we have to fill out this form?
Right. And it was, and the idea was that they were never going to fill it out, but it gave you a very easy civil penalty to assess. And this is why the Bank Secrecy Act of 1970 inserted the FBAR language in there, and it had nothing to do with tax administration, and still,
no.
The two have nothing to do with them. One of them is in Title 26 of the U.S. Code. The FBAR is in Title 31. They have nothing to do with each other. So I would just think, because my TIGTA buddies are pretty sharp on the ball. They're like, hey, what is going on here? Why FBARs are for terrorists? Mm-hmm. So what's going on?
A follow-up question, why are people's life savings at risk? Simply because they didn't know there was a form they had to fill out?
That's right. These are, we're talking, someone's life savings. And I think this is one way to think about it. Okay, if you work at the IRS, you're going to retire and you might get a pension that's $60,000, $80,000, $100,000, right? Mm-hmm. How much money would you need in a bank account to generate that sort of income? Kind of depends on your rate of return and how much principal you're able to dip into, but you could say $2 million, right? Okay. So if you're an IRS employee, basically think about you having $2 million out there. And what happened if someone came around and say, oh, actually it's $1 million? How would you feel? Because that's the way it is for most people. When they have these large amounts, guess what? They're not 20 years old. That was their life savings and that was their retirement. Mm-hmm. And so you're not going after these mastermind criminals. You're going after people who've worked their whole life to save up something for their retirement. So that's really, I would say, TIGTA's going to get on top of this.
Yes. Okay. So we also got some information from another firm, got the Freedom of Information Act.
Right.
They got a whole bunch of emails back and forth between IRS employees about how to answer some OVDP questions. Lots of confusion. But one of the things we saw in those emails, it was basically they were saying, we have to penalize everyone to the fullest extent of the law.
Right.
Everyone.
Really, really hung up on these penalties.
Yes.
Somehow that these penalties are going to say, oh, look how fair the IRS is going to be. I'm going to want to comply with them in the future because look at how much they've punished me. Mm-hmm. So, there was another thing I thought TIGTA would be on top of. I thought they'd be right on top of that.
How about crappy things like why is a Holocaust survivor's OVDI from 2009, in which she didn't report $3,000 in interest income, still open?
Yeah, that's one of our cases. And it's still open. And I think maybe in this video, Chris, if I can get you a picture of Ulysses, who is now 6 years old. He's actually, her OVDP, her OVDI submission is actually older than my firstborn son. And my firstborn son can read and write. Mm-hmm. And so just think about that. So that's how long that's going on. I thought that, maybe TIGTA would say, hey, how are these cases? How old are some of them? Mm-hmm. And, really what they could have done, because I think they could have talked to some practitioners to get our side of the story to say, hey, look, this is really what's going on. So we were hoping they would address that.
Why are so many OVDPs, I can never say OVDP, submissions completed by incompetent professionals, or are the forms so onerous and confusing it's hard to do them? It's not the incompetency, it's just they're difficult. And
I would say if what I would hope TIGTA would be saying was like, offshore disclosure program, foreign taxation can make competent preparers look incompetent because that's what we see. Even very, very good otherwise very good CPAs, professionals who can really do a good return. When it comes to the foreign stuff, they lose it with good reason because it's so complicated.
Yep.
I hope that TIGTA would have said, yeah, this is ridiculous, or this is way too difficult, way too difficult.
Let's simplify.
Yeah.
Why does the IRS require people in war-torn areas to be concerned about filing the FBAR? So, for instance, a bank account holder in Nigeria, their lives could be at risk trying to get this information.
Right, and that might sound silly to us. But you're imposing this. The IRS has this worldwide taxation, and the FBAR requirement is a global thing. But I've done some research in Nigeria for a client of ours, and I'm going to say it is one of the worst places in the world. Anything bad that happens in the world happens in Nigeria. I'm not saying everything that happens in Nigeria is bad, but if you name some sort of disease, terrorism, illiteracy, toxic spills, graft, kidnapping, it all happens in Nigeria. And this is really an issue some people are having. And it's not just Nigeria, but you can imagine, well, I have a bank account in Iran. I have a bank account in other countries where I don't want people to know I have the money, and I kind of want to keep it between me and the bank. I don't even want the bank really to know I know. So if I go start around asking questions to say, hey, I need my account numbers. I have over $10,000, as you know, and I need to report that on my FBAR form, or I have over $50,000, and I need to report that on my 8938. Could you hand me that money, that information? Because look, in these countries, that teller who's going to give you the records might be on the phone with like, hey, I got a guy. They're able to put a name to a face. They're able to put a name to a face. Here he is. This is what he's driving. Here's his car he's driving. Trust me, I know he has this money you can ransom for. And that's a real risk for what? And here's the thing. What does the IRS do with this information? What, someone has $10,000 in a bank in Nigeria. Now what? You can be 100% tax compliance and not file an FBAR. It's true, because again, FBAR is Title 31, tax code's Title 26.
It's just a reporting requirement, nothing to do with
what are you
taxes.
doing with it? Right.
All right, so those were some of our expectations.
Yeah.
Okay, but
maybe
reality,
we aimed a little high.
Yeah, maybe a little.
TIGTA's pretty, on
in
the ball.
past.
Yeah, exactly.
So you started to read the report.
Yep.
And now here's the first sentence that got your attention, I think in the first paragraph.
Yeah.
The United States generally taxes its citizens and resident aliens on their worldwide income.
I mean, if you say, as long as you substitute generally for always. So, I mean, why the language generally? That seems more of a euphemism. No, the United States taxes wherever you make a dollar around the world when you make it. Why are we de-emphasizing what the tax code is? And that's sort of alarming. They're sort of, are you doing a little PR for the IRS? Because no, that's not generally. It is always. And then it also sort of misstates citizens and resident aliens. Well, I'll tell you what, if you're a resident alien in the US, you have a green card, okay, you could leave the country, but I guarantee you this, your worldwide income is still taxable. You have to formally renounce your green card. You have to do these things. So you're not exactly telling it right. And then also there are certain times when non-resident aliens will have their worldwide income tax too. So they're not quite stating it correctly. You're sort of getting 90% there. So that was sort of my first alarm. Like, why? This report might not be what I'm hoping it to be.
They're generally generalizing.
Generally generalizing. It is generally true, but not really stating the United States is like any other country in the world that taxes brutally. That's what they should have said first.
All right. Error number 2. Some taxpayers use offshore bank/financial accounts to hide assets and income outside of the United States in an effort to evade their federal tax obligations.
And it's true, but the tone is the error. Some taxpayers fly airplanes into the IRS. I guess it happened once, so you could say some, right? What's the percentage? What's the percentage of some taxpayers? This is sort of a blanket slander. You have nothing to back it up. Our experience, the people who have things, have financial accounts offshore are not doing it for evasion purposes. They do it because they have some sort of connection with the country. It makes sense. Oh, I want to do it. Or, for instance, somebody has bank accounts in Costa Rica. Why'd you do that? Oh, because they actually pay a rate of interest. The U.S., I get a 0.5% rate of return. In Costa Rica, I'll actually get interest. In India, another country, they actually give you interest. So I was kind of thinking of doing it there. Kind of legitimate reason. Instead of my money sort of getting devalued, I wanted it to appreciate over time.
Yep. Taxpayers who intentionally fail to report income earned on offshore accounts or neglect to disclose foreign assets as required by the law face significant penalties and possible criminal prosecution if discovered by the IRS.
So this is really where I would hope TIGTA would have gone through to say, hey, look, the Bank Secrecy Act was really to go after terrorists. So could you give us a little stats?
A percentage.
Yeah, just give us how many terrorists have been shut down by FBARs, right? Tell me, where are they? Where are these terrorists? Instead, the FBAR is used to terrorize U.S. taxpayers.
How about a press release with some names of some of the money launderers and terrorists?
I would love.
Drug dealers?
I've been searching for this. I don't know. I can't say I have all. Maybe in the 70s, the databases might be somewhere weird. Boy, that would help me out. I mean, if I had the resources, the government resources, I would really say, hey, look, guys, these are all the FBAR successes that we have. These are the people we shut down. Seems to be really silent about that. But we do hear about, somebody, we do hear, there are people, somebody who, we had one case, Williams. There, the taxpayer admitted, pled guilty to tax evasion after the fact. And during the trial, he didn't file his FBAR. Because it's like, well, I pled guilty to the thing that I had the account. Well, you didn't file your FBAR. Yeah, but I pled guilty to the crime. Yeah, but we're going to assess you willful penalties. Really? You didn't, they don't want to talk about that. They don't want to talk about John McBride, who didn't even have control of the money he was assessed. They don't even talk about that. They don't want to talk about the horrible FBAR penalties and how odd they've been assessed, perverted, turned on its head. Where's the analysis to say, is this law accomplishing anything it was intended to do, or is it just turned against people who aren't savvy enough? And by the way, they never quite meant, and one thing I did write a beautiful little blog on how to avoid willful FBAR penalties. There's a beautiful little loophole you can do if you actually had a criminal intent and you wanted to avoid willful FBAR penalties. It's quite simple. The day before your FBAR is due, take that money out and open up a new account. Guess what? Your FBAR penalty is based on the account balance the date your FBAR is due. So now it's 50% of zero. Now, I'm not saying you want to be charged with something else, but why didn't you mention that? Like, hey, there seems to be
big hole.
Yeah, the site IRS Medic really talks about the FBAR. We should have maybe give us a call. We could have given you a lot of helpful information on how things are really working instead of these incomplete press releases, answers from the IRS. They're just seem to be regurgitating, and they're off. They're really, really off. They don't have a fundamental understanding of what's really going on.
Now, TIGTA usually, when they do a report, they end with suggestions, ways the IRS can improve. And again, we had high hopes, although by the time we got to this part of the report, we weren't. Okay, so the IRS review for audit or criminal investigation, all denied or withdrawn offshore voluntary disclosure requests for FBAR penalty or criminal charges.
Yeah, and that's also, it's tied together with they're saying IRS criminal investigation should get more involved with withdrawn or denied OVDPs. And again, guys, you could a call to IRS Medic could have answered this for you because a lot of these are our clients. We might have put in a pre-clearance, we might have started the process, but facts come out. Oh, actually, that account didn't earn money. I could just do the delinquent FBAR. Actually, I'm going to go streamlined. That's very common. Some of the things like as we talk more about what happened, we see some facts develop. No, they didn't withdraw. There's a reason why. And all you need to do is ask. It's not like they're like, oh, I don't have a problem. They're getting competent, real advice to say you actually don't need to go through the full onerous procedure of the OVDP. Here's really some other alternatives. And this idea that you need to get criminal investigation involved in these cases, it's like, are you kidding me? CID, they got room for 3,000 indictments a year. 3,000. And if they were investigating everybody with offshore accounts who didn't report an FBAR correctly or withdrew from an OVDP, everything's going to be shut down. You don't have the resources. This does not make a lot of sense. And the answer is not what you think it is. People like, yeah, I'm just not going to disclose. No, they don't need to, or they need a different program. Why didn't you look into that? Maybe you should have.
TIGTA came up with their own mathematical equation on how many millions of dollars in penalties we're losing because of this, but it's not based in fact.
Right, and they seem to have a chip on their shoulder about, oh my God, this is the penalties we could be getting. And that's really, I think that tone is really what set me off, because they're usually not like that. Like, where are these penalties in relation to encouraging future compliance? Don't you see that you guys might be looking like, jerks here, complete jerks? And when, and really retirements, Australian superannuations, this is a huge issue where you're taxing someone who has a tax-deferred retirement plan wherever they are. And now, I mean, this is really a thing. Not everybody can afford to hire us. To do this correctly, it's gobs of money. I'm sorry, that's just the way it is. It's gobs of money to do this correctly. And that's something they could have said. In order to hire a competent, in order to hire someone who actually can do this, it takes gobs of money. And then they also make the wrong suggestion that, where you're having GS-13s auditors review this. And then you don't need GS-13s. You could go with a lower level. And I'm like, you kidding me? Simple cases. Someone with a simple case is one Australian superannuation. That's a simple case. Any sort of foreign retirement is a simple case. And it's mind-bogglingly complicated, where you're looking at the treaty, the savings clause, your 3520A, your 3520, whether it's a grantor trust, employees trust, what percentage is self-managed. The issues are incredible, from just one retirement account that would be nothing if it was in the U.S. And sometimes people in the U.K. are saved, depending on what your treaty is. And it didn't mention that. Right? Didn't mention like, UK people with pension plans, they're okay, but those Australians, we got to make sure we hammer them.
Yep.
So it's just such a superficial analysis that really seems to be, they're calling, to me, I don't know. Somebody could give me a call, but this is my impression of it, that someone's like, hey, I got to do this report on an OVDP. And they call a friend of theirs who works in the OVDP. They're like, okay, tell me what's going on. All right, so that's going on. Okay, well, all right, what should I do? It seems very rushed. It doesn't seem thorough. It doesn't seem fair. It seems really on the side of the IRS. And unfortunately, what we see, too, is a lot of tax practitioners, lawyers out there end up on the side of the IRS. And they're not outraged by this. They're not. They're like, yep, these people are hiding their money. And I'm like, are you representing clients, or are you just taking the IRS's official party line because you meet and you have dinner with them and you meet them across the country and they're nice guys and you don't want to offend them? I mean, ultimately, if you're defending if you're representing clients, you have to say, you guys have the moral high ground. Our clients always do. Now we have to deal with the reality of the IRS, and we'll do the best we can with that. But how can you be an advocate when you actually don't believe in your clients?
The jerk store called. They're all out of you. So there is one thing, if I can just end on a positive note,
yes.
one thing we did agree
yes.
with. TIGTA recommended a centralized tracking system and one mailing address, because right now they have two. And so some mail goes to one location and some mail goes to another location. So perhaps,
which now reminds me of another failure I didn't mention, that you can be assessed taxes while you're going through the OVDP, and they can try to assess and collect taxes that you actually don't owe, because the IRS's automated collection system can't communicate with the OVDP department, and you will be frustrated. And we've had... Remember our Holocaust survivor? She had a bank account levied because the IRS couldn't get it done, even though we were assured by 5 different people. We had collection holds. No collection action would happen. The bank account was levied, and it was, luckily we were able to get it, taken care of. But really, I mean, how much more do you want to embarrass yourself? And so when you're not mentioning these huge glaring holes in here, I'm looking at this, I'm saying, TIGTA, you're sort of losing a little bit of credibility with me. And, I was, a big fan of you. And this is just really disappointing.
So we're suggesting OVDP report 2.0.
I would say so. You can start calling with people like us.
Yep.
And, we could report, we could send you to some other practitioners who know what they're doing. And see some of the issues. And we could really help you draft. I want to help you draft a better report, something that will help everybody involved here, because this is just not going to help anybody.
Yep. So call us, 888-727-8796. If you do have OVDP issues or tax concerns, don't hesitate to contact us as well. info@irsmedic.com. If you've got an inside intel and TIGTA, have them call us. You can also subscribe to our channel for the latest tax updates. Thanks so much for watching. IRS Medic, the law offices of Parent LLP, real tax attorneys for tough tax problems.